Hi everyone, a very good morning. It is extremely a pleasure to welcome you all to our 103rd edition of our Zen Tax Talks and the first Zen Tax Talk session of this new calendar year. So wishing you all a very happy new year, and we have this very special session to address on a very important issue which has been going along for many of the taxpayers. The topic for discussion today is with respect to the ITC on cancelled dealers, where notices have been issued and orders have been made for many taxpayers alleging that input tax credit is not eligible to you in respect of certain inward supplies because the registration of the supplier has been cancelled. So, in respect of this topic, we have here with us our own expert, CAP Prashant Surya, as well, to take us through the presentation and to give the entire groundwork for this entire presentation. I will take you through the important legal provisions, and we will also discuss very practically with respect to how notices have been issued, how orders have been made, and we will try to interlink these notices with the legal provisions to understand how these case laws can be applied in our favor, or the situations in which the legal recourse cannot be really adopted. So we will have Prashant Surya to take us through the very important case laws, and I will take you through a couple of notices to really understand how to really face a GST notice or an order when it comes to the aspect of ITC on cancelled dealers. So we have structured this to say that there are three important things. You need to know what are your rights with respect to the eligibility of input tax credit, number one. You need to read the notice or the order right to understand what has been alleged in the notice. What does the notice basically speak of? What is the legal provision that you have contravened with respect to the ineligibility of ITC that has been alleged on the taxpayer? And ultimately, how do you protect your own input tax credit? So basically, with respect to this is one extract from an order which has been made. And here we are also taking into account this is a part of the notice that has been reproduced in the order, where in respect of one private limited company, irrespective of the fact that the supplier has filed his GSTR1 on the respective due dates, or sometimes even belatedly, and also on the fact that the supplier has filed his 3B, the notice has proceeded to say, without the supply of goods, so and so concrete private limited filed GSTR1, passed ITC, and during the visit by the GST officers, so and so private limited is non-existent in the declared place of business, and the registration of ITC passed, and the registration of the ITC passer was cancelled in February 2024, retrospectively with effect from 1st July 2017. So I have been passed some ITC from a GST registered taxpayer whose registration was cancelled in February 2024, but retrospectively with effect from July 2017. Hence, action initiated to recover the tax along with interest and penalty, quoting the legal provisions of section 50 subsection 3, which provides for interest, and section 74, which talks about fraud, willful misstatement, suppression of facts, where there is no specific word which has been very specifically said why there is fraud, why there is willful misstatement, why there is suppression of facts. There is no specific legal provision quoted as to why that ITC is ineligible. They have visited on one specific day. On that day, the business was non-existent. There could have been n number of reasons why the person was not available at that place on that specific day. They might have moved to a nearby premises which was not duly intimated to the GST department by way of amendment in the GST registration, the non-compliance of which would attract a penalty, but cannot really make my input tax credit actually ineligible. They also say that they are proof of receipt of goods to be produced, failing which assessment will be finalized with available proposal from intelligence. So this is with respect to the notice which was actually issued. Is there at all any legal provision quoted or any legal provision referenced for alleging this ineligibility of input tax credit? So this could be one kind of a scenario where the registration was cancelled with effect from 1/7/2017 for a person, cancelled only in February 2024 for various grounds and reasons known only to the supplier. The other notice that I would also like to show you over here immediately now is with respect to a common heading, ITC claim from cancelled dealers, return defaulters, and tax non-payers. So all these three people, they have clubbed together and quantified an amount to be as total ineligible ITC. The legal provisions quotes under section 16 subsection 2 clause C, every registered person shall be entitled to take credit of ITC on supply of goods or services to him, subject to the condition that the tax charged in respect of such supply has been actually paid to the government, either in cash or through utilization of ITC admissible in respect of such supply. However, as seen from the office records, it is observed that you have taken ITC from taxpayers who have not paid tax on their outward supplies to you. Therefore, the above amount of ITC is proposed to be recovered along with interest under section 50 subsection 1. So we had another notice just now seen where interest was recovered under provision of section 50 subsection 3. Now we have another notice where interest is being recovered under section 50 subsection 1, where we do not have any clarity on which is the applicable section for interest. There in the other legal provision, section 74 was quoted for denying the eligibility of input tax credit. Here at all, we see that input tax credit has been made ineligible, quoting the provisions of section 16 subsection 2 clause C. But having three different legal provisions, three different factually different positions. One, where the registration of the supplier was cancelled before the date of invoice. Date of invoice, let us assume, is on the 1st of January 2021. The date of registration of date of cancellation of the registration of the supplier was any date before the 1st of January 2021. That is the effective date of cancellation. What is the actual date you cancelled it, and from what date did you cancel it? This is not extremely very clear with respect to the allegation made in the notice. The second of it is with respect to the fact that the supplier failed to file the 3B and did not pay the tax on the invoices declared in GSTR 1. Two different facts have been brought together using the word and. That is, they said supplier failed to file 3B. Okay, he did not file 3B. Okay, and did not pay the tax on the invoices declared in GSTR 1. Let me take another simple scenario where the supplier made the payment of tax through DRC 03. For some reason, the supplier could not file his 3B and therefore could not disclose his liability properly in 3B. The supplier made the payment of tax through DRC 03. In such a situation, can the provisions of section 16(2)(c) as is quoted here on the notice be taken? The supplier, it has been alleged that the supplier has not actually paid the tax to the government, but if the supplier has paid the tax through DRC 03, what would be the recourse in such a situation? whether the department has actually verified that ground fact that the supplier has not actually paid the tax in any manner needs to be really also discussed. The third of the important allegations that has been made, third of the different factual position that has been brought out here is that supplier filed 3B, but the turnover reported in that 3B was a nil turnover and therefore did not declare or pay tax corresponding to the invoices declared in GSTR 1. Let's take the month of January 2021, which is the example that we have been discussing. For the month of January 2021, the supplier filed as GSTR 1, but inadvertently, the supplier filed a nil GSTR 3B. He had two options. He made the payment of tax through DRC 03 or taking the benefit of the circular issued way back in December 2017, which provides that if at all anything got missed out in any GSTR 3B, it can be rectified in the immediately pursuant GSTR 3B or anytime before the filing of annual return as the time may permit. Taking the benefit of the relaxation that and also considering the fact that a revised GSTR 3B or an amendment to the GSTR 3B already filed is nowhere practically possible, the supplier has actually remitted the tax in the subsequent GSTR 3B. What will happen to that fact? Where the supplier has already made the payment of tax, then how do I really take the benefit of input tax credit? Can the government be enriched with tax twice? That is, the supplier has remitted the tax not in the form of filing GSTR 3B, but in any other format. And I have also reversed the input tax credit. Will it be right that the government is enriched twice just merely for a procedural non-compliance that the payment of tax was made in any other method, not through the filing of GSTR 3B? So these are some of the very pertinent questions that needs to be raised whenever notice of this nature is being taken into account. So I will drive through the legal provision. There has been the provisions of section 16 subsection 2 clause quoted. There is also one other very important provision which I really want to bring to the interest of the august audience, where we will be able to take protection or we will also not be able to take a protection for the period later on. So first of it, before I really move forward, I will just discuss the provisions of section 16, which is talking about the benefit and the eligibility for claiming input tax credit. Section 16, eligibility and conditions for taking input tax credit. Every registered person shall, subject to such conditions and restrictions as may be prescribed. So there may be conditions which may be provided for in the rules and in the manner specified for in section 49, no reference to any other section. I will talk about one important section and I will tell you that there is no reference to section here, but there is a reference in another conditions when it comes to section 16 subsection 2. Subject to be entitled to take credit of input tax charged on any supply of goods or services or both to him, which are used or intended to be used in the course or furtherance of his business, and said amount shall be credited to the electronic ledger of such person. So 16.1 is the enabling provision for claim of input tax credit. Section 16 subsection 2 goes to say, notwithstanding anything contained in this section, that is a non-obstant clause, which is an overriding provision over the provisions of section 16 subsection 1, which goes to say, no registered person shall be entitled to the credit of any input tax in respect of any supply of goods or services or on successor or both to him, unless we have section 16.2. See, now it says that subject to the provisions of section 41. So therefore, section 41 is something which is very important and now brought into the provisions of section 16. Subject to the provisions of section 41, the tax charged in respect of such supply has been actually paid to the government either in cash or through utilization of input tax rate admissible in respect of the said supply. So the supplier ought to have made the payment of tax either either in cash or through the utilization of input tax credit, and that is subject to the provisions of section 41. So this has been the provision that has been quoted here in the second notice that we saw. So we will refer to what section 41 basically talks about. When we talk about section 41, you need to very importantly understand that section 41 of the CGST Act, as is existed up to the 30th of September 2022, has been fully substituted, including the title of the said section from 1st of October 2022. This section 41 is a very, very crucial subsection, is a very crucial section. And this section in its entirety, including its title, that is, including its heading, has been substituted in its entirety with effect from 1st of October 2022. Therefore, for the period from the 1st of October 2022, what is the section 41 talking about is going to be completely different. And for the period before this amendment, it is going to be completely very, very different. So what was the legal provision until the 30th of September 2022? The title of the section, that is a heading, read the claim of input tax credit and the provisional acceptance thereof. So there is a very direct correlation between the eligibility and the claim of input tax credit as is contained under section 16 and along with section 41. Every registered person shall, subject to such conditions and restrictions as may be prescribed, be entitled to take credit of the eligible input tax as self-assessed in his return, and such amount shall be credited on a provisional basis to his electronic credit ledger. So the amount that is credited to the electronic credit ledger of the taxpayer is not final, it is only and only provisional. The credit referred to in subsection 1 shall be utilized only for the payment of self-assessed output tax as per the return referred to the said subsection. That is, it cannot be utilized for the payment of interest or penalty as the case may be. It can be used only for the payment of self-assessed output tax. This is what was contained in section 41 as it existed up to the 30th of September 2022. Has there been any reference to section 41 in any of the notices issued earlier alleging that the input tax credit was only provisional and therefore the final assessment with respect to input tax credit is being made? Do or does any of the notice make comprehensive assessment of the input tax credit eligible during the course of audit, assessment, whatever be the type of notice, be it starts from A7010 or be it starts that from ADT02, be it a preventive notice, whatever is the notice, do they make an assessment of the input tax credit during the course of departmental proceedings? Because the assessment, as I said, is only provisional, right? The eligibility of input tax credit is only provisional. Is there any departmental assessment made to the eligibility of input tax credit? I have not seen or come across any situation where there has been an assessment made with respect to the entire claim of eligible input tax credit. No. I have claimed input tax credit my GSTR 3B to the extent of rupees 1 crore. Is there an assessment made to make sure that the input tax rate, which was provisionally credited to my electronic credit ledger, now is being finalized by the department through any of their departmental proceedings? No, not at all. So there has not been any legal provision also provided to finalize or to come to finality about the eligibility of input tax credit, in the absence of which then the provisional is deemed to become final. In our interpretation, where there is no provision under law where the departmental officer will make a final assessment with respect to my provisional input tax credit, right? So the input tax credit that comes to my electronic credit ledger is only on a provisional basis. But in the absence of any other provision where there is an assessment done for finalizing the input tax credit, I would always claim to say that the input tax credit, though is said to be on a provisional basis under the provisions of section 41, since there is no final assessment provision at all existing under law, my ITC claim is final. Therefore, this provision, as it existed up to 30th of September 2022, will have a limited significance in our very important interpretation. Going to the interpretation of the legal provision as it exists from the 1st of October 2022, can this be any of the ground to deny the eligibility of input tax credit for ITC on cancelled dealers? The topic of discussion is with respect to ITC and cancelled dealers. We spoke about section 16(2)(c), which speaks that the supplier has not paid the tax to the government, then I will not be eligible to take the ITC. Now, section 41 as it exists from 1st of October 2022, very simply goes to say it does not use the word provisional basis. Every registered person shall, subject to such conditions and restrictions as may be prescribed, be entitled to avail the credit of eligible input tax as self-assessed in his return, and such amount shall be credited to his electronic credit ledger. Yes, it has got credited to his electronic credit ledger, very similar to the wordings as is contained in section 16, subsection 1. Then they now go on to say the credit of input tax availed by a registered person under section 41, subsection 1, in respect of such supplies or goods or services or both, the tax payable whereon has not been paid by the supplier. He has not paid for the reason that he has got cancelled, it has not got cancelled. That shall be reversed along with applicable interest by the said person in such manner as may be prescribed. Now, they have brought in another legal provision where they said, where the supplier has not made the payment of tax, then I need to reverse such ITC. Then I also spoke about another important provision where the supplier did not make the payment of tax at that point in time. The supplier did not make the payment of tax through 3B. The supplier made the payment of tax through DRC 03. Come what may, can the government be doubly enriched? Answer is a straightforward no. And for the saving of that legal provision with respect to the department, we have the proviso after section 41, subsection 2, which goes to say, provided where the said supplier makes the payment of the tax payable in respect of the aforesaid supplies, the registered person may re-avail the amount of credit reversed by him in such manner as may be prescribed. The re-availment of such ITC, which was reversed due to the fact that the supplier did not make the payment of tax, has also now been very clearly provided for without any reference to the timeline as is contained under section 16, subsection 4. You members will be very well aware that the re-availment of ITC is the time limit to avail ITC is provided for in section 16, subsection 4, which goes on to say that the ITC relevant to the financial 24-25 needs to be claimed before the 30th of November 2025. But with respect to this re-availment of ITC, which is a specific provision as is specifically provided which is already provided for re-availment in section 41, subsection 2. Whenever you have reversed the ITC, since the supplier has not paid the payment of tax to the government, then you are eligible to avail such ITC. So, these are all some situations where only when the notice alleges the invocation of section 41 for the period after 1/10/2022, then the notice itself will per se stand. A notice merely quoting the provisions of section 16(2)(c) and also without any reference to the factual position as to the date on which the registration of the supplier was cancelled, but merely looking into the effective date of cancellation. That is, in many situations, we could see that the registration of the dealer has been retrospectively cancelled from a much earlier date without reference to the current date. Therefore, our own expert, CA Prashant Surya, our Chief Knowledge Officer, will take you through a very few, very landmark, important case laws and also deciphering the nuances of these case laws for the benefit of our august audience. So it has been an extremely very delightful experience to address you all. We welcome you all very personally to our next week's and our upcoming week's webinar. The next week webinar is going to be an extremely very special event where we will talk about the involvement of AI in GST litigation. We will talk about how artificial intelligence is transforming GST litigation. We will demonstrate how each one of you, each of the participants would be able to leverage AI completely, a non-hallucinating artificial intelligence solution, because any of the commonly available AI solutions are prone to hallucination. That is, they might write some legal provisions which are non-existent. They might interpret Section 41 with effect from 1/7/2017, or the legal provisions of Section 41, which was amended with effect from 1/10/2022, might be applied for the period of 2022-23 also. So there might be a lot of issues with respect to the openly available AI solutions. We will have a very special session wherein we will talk about the involvement of AI in GST litigation, how the best AI solution can be provided at the most reasonable cost. For a sneak peek for specialized members of this webinar, you may please share your email ID, wherein we will take you through a one-to-one session for explaining about how the AI solution can be a very revolutionary aspect in the entire aspect of GST litigation. And we will also be live for you all from Delhi, from a very milestone event, a global event, the World Forum of Accountants, which is hosted by the Institute of Chartered Accountants of India, the flagship event of the entire year, where many countries are coming together to discuss about how the accounting profession, the auditing profession, the tax consulting profession is getting transformed. And we from Zentax Clinic have put up a stall at OFA, the World Forum of Accountants at Delhi, so which is expected to have almost around 1 lakh participants from across the globe. So we will be live from OFA talking about the future of the entire GST litigation practice, talking about how AI would be a very transformatory revolution in this entire GST litigation. We will have our experts and we will be there live from OFA. We welcome you all very personally to our very special 104th session of Zentax Talks being hosted next week. And the week thereafter will be as well a very special event talking about the union budget. So we have always the union budget, which comes as a very special session. So we will have a very special session on the union budget. We request you all to share the details of these webinar to all your friends and your professional colleagues so that everyone can get the maximum benefit out of this. So we will have CAP Prashant Surya on his very special day, So I will just switch off my video now. So CA Prashant Surya talking about a very special topic on ITC, on cancel dealers for the benefit of all. And it is his very special day. Very happy birthday to you, Surya. I think Surya is celebrating his birthday today. So our very best wishes to Surya on this very grand webinar. So this webinar has had an impact on more than 10,000 unique participants over all these 100 webinars. So we are very proud to have you all at this webinar. So Prashant Surya addressing you all on this ITC on cancel dealers with respect to some very special case laws. Over to you, Surya, please.
Yes, sir. Thank you very much for the wishes, sir. First, I will start off with thanking you for attending this webinar and also inviting you to our special webinar in the upcoming weeks. We are very thrilled about your feedback about the AI tool that we have personally developed throughout many months and days. So I start off with inviting you all to the next webinar also. So to start with, the very interesting provision with respect to GSTs with respect to this ITC on cancel dealers. Aravind sir has thrown light upon various sections and rules on which this ITC is alleged by the department, or which the department misses to mention while alleging this ITC. Here, this comes a very interesting set of allegations because with respect to ITC, we all know that there are continuous department scrutiny relating to it, that there are some fake ITC allegations, all that is there. But with respect to this cancel dealers, there comes a very interesting thing to say that all other allegations with respect to ITC is within the control of the taxpayer. I can very well say, because we all know, as Aravind sir has run upon section 16. I can mention you that with respect to 16 subsection 2, there are various conditions with respect to only which you can avail ITC. Only after satisfying everything, you can avail input tax credit with respect to a particular transaction. So if I mention those conditions, the first condition is question of tax invoice. Of course, it is within the control of the taxpayer. The taxpayer can very well make sure that he has a valid tax invoice. If it is an e-invoice, he can make sure, because it will be QR code generated thing. So it is very easy for the taxpayer to convince himself at least to say that it is a valid tax invoice and he is having hold of that. The next thing is receipt of goods. Of course, a person doing business will very well know that they will have a clear input-output ratio to say that what and all goods they have received. They would have had a GRN, goods receipt number in the security office. They will have an entry in the accounting software. They can very well say that they have received the goods and services. The next thing is, they should have filed GST or 3B returns. Of course, while filing GST or 3B returns only, the monthly return which we file, which is due on 20th of the following month, only on filing which we will be able to avail the input tax credit, because through filing GSTR1 we cannot avail the input tax credit. Only through filing GSTR3B we can avail the input tax credit. The next most important thing, the fourth most important condition is, the supplier should have paid the tax to the government. This is the most uncontrollable condition that is put upon within the ambit of the taxpayer, because it is only up to the taxpayer to confirm that whether he had paid the tax to this, he had paid the tax along with the taxable value, he had paid the tax to his supplier. It is impossible for him to check whether the taxpayer has duly paid his tax to the government. He can very well check his filing status, but in the filing status also we are not very sure whether he has filed nil return, whether he has included our transaction. Of course, with respect to at least GSTR1, we can check whether he has included our transaction or not. Otherwise, it is impossible for him to practically check whether the supplier has paid what he has delivered as tax to the government. So, I think this is the most uncontrolled condition that is thrown upon within the ambit of the taxpayer. So we have many allegations, continuous department scrutiny with respect to this particular condition, saying that the supplier's registration has been cancelled. So now you should reverse the ITC because the supplier has not paid tax to the government. That information is available only with respect to the government, because we cannot manually check in the portal that in GSTR3B whether he has included our transaction or not. As we already said, with respect to GSTR1, at least we have a check to say that whether if it reflects in my GSTR2A or 2B, I can confirm myself that he has shown that particular transaction in GSTR1. But with respect to GSTR3B, the taxpayer is no option to check whether the GSTR1 tax liability, what the supplier has disclosed, and GSTR3B tax liability, what he has disclosed, matches, or whether he has filed GSTR3B without nil return. That we cannot check. That information is available only in the hands of the government. So it is actually impossible for the taxpayer to check if the supplier has duly deposited the tax to the government. So in this situation, this was the most important part of the notice. Aravind sir has also shown 2 notices where it is given that for cancelled dealers we have to reverse the ITC, but there is no subsequent rule 2, there is no corresponding rule 2 to substantiate it. Of course, there is an explicit rule in the GST Act to say that the entire burden of ITC, what a taxpayer has availed, he has to prove that the eligibility of ITC. But with respect to, specifically with respect to this cancelled dealers, it is little difficult for the supplier to prove, it is very difficult for the taxpayer to prove that the supplier has actually deposited the tax to the government. In that scenario, of course, the rules and the GST Act form a basis on which we should very well dispute any notices that will be thrown upon us. In the cancelled dealer scenario alone, in the cancelled supplier scenario alone, there are some important case laws which we should all, which we can always take protection, upon which we can always take protection to say that our ITC is eligible. So I'll just go through some of the case laws which I have specifically taken for this webinar, and I will conclude saying what are all the evidences that we should produce to the government to prove our eligibility, as we cannot directly check with the supplier, check the supplier if the supplier has deposited the tax to the government. So in that case, the first most important case law that I would like to point out is Kurja Scrap Trading Company versus Additional Commissioner. That is the very recent case law with respect to cancelled dealer. With respect to cancelled supplier, there are two issues. One thing is input tax credit. The other thing is the fear of cancelling our GST registration. We have also seen some cases where the department concludes that the supplier's GST registration is supplier is not doing a genuine GST registration due to various issues, like Arvind sir pointed out. Once they are visiting to the supplier's premises, it was not there active as on the date of visit. So they conclude saying that the supplier is not taking part of business, he is not actually doing business, so cancelling his registration, which also leads to cancellation of registration to his customers, because they take a point of view saying that when the supplier itself is fake, he is not doing actual business, how can he could have delivered some goods to his customers? So they are also doing only fake business. So that is very adverse approach that the department takes. So with respect to cancelled dealers, we should take where there are two issues. One is with respect to ITC, one is with respect to registration. The common issue is only with respect to the ITC. Registration is cancelled sometimes, only if they are the sole supplier of the taxpayer, only then the registration is cancelled. The department goes to the extent of cancelling the registration. Otherwise, generally what they tell is you should reverse this ITC with interest. That is what the notices point to. So the first case law, what we are going to see is Kurja Scrap Trading Company versus Additional Commissioner in Allahabad High Court. The dispute here was the department denied ITC and imposed penalties because they have visited supplier's premises. After a physical inspection there, they have decided that the supplier is non-existent. The supplier is actually non-existent. So they have sent to their customers saying that they have cancelled the supplier's registration, and what are all GSTR in the GSTR 1 returns to what are all customers he has filed returns when he was actively filing GSTR 1 returns. They are taking that customers and sending notices to all the customers asking them to prove their eligibility of ITC, saying that he itself is a non-existent supplier, so he could not have delivered to you the goods or services for that matter. So you should reverse that ITC. This is the inquiry that is thrown upon the taxpayer. So in this particular case, Arvind sir has pointed about two things, where in one thing, the registration is cancelled, the registration of the supplier is cancelled prospectively. In other scenario, the registration is cancelled retrospectively. Usually, in many cases, what we saw, the registration is usually cancelled retrospectively. In this case law, the transactions occurred in November 2021. Supplier registration was only cancelled later in April 2022. Of course, the supplier registration was cancelled retrospectively, but the cancellation was only done in April 2022. The petitioner, the taxpayer, the customer actually argued that the purchases was duly reflected in GSTR 2A. In 21-22, the GSTR 2B was not very much prevalent. So the petitioner, the customer, said that the supplier has filed duly his GSTR 1 and GSTR 3B. In the GSTR 1, he has specifically mentioned our transaction, which led to the reflection of that transaction in his GSTR 2A. The payments were made through only banking channels. It is not made through cash. Movement of goods was verified through toll plaza records. So, if the vehicle passes through toll, that transaction the customer has taken note of, and he has submitted that to the department while arguing this case. So, at the time of supply, at that November 2021, at that time of supply, the supplier held a valid registration. What the customer argued was, at the time of his supply to me, in his place of business, he was carrying a registration. Maybe at the time of your inspection, he might not have carried on business. I am not very sure of that. But when I transacted with him, when I supplied goods to him, and when I made payment to him, I genuinely received my goods. He was active at the place of registration mentioned in the GST portal. That was his main argument with respect to this case, upon which actually the department has stamped section 74 notice with respect to this transaction to the customer, saying that they have only taken fake ITC, they have not received goods itself in the first place. So, the court, the Honorable Allahabad High Court, was very strong upon their view, saying that other than the argument that the supplier's registration was cancelled, there is no such evidence to say that the customer has not received the goods, because they have made payment through banking channels, they have shown toll plaza receipts, their ITC was duly reflected in their GSTR 2A. The supplier has filed GSTR 1 and GSTR 3B for that matter. So, definitely, the Allahabad High Court was of the view that there is no provision to invoke section 74. We all know that section 73 is given for non-fraud allegations, and section 74 is given for fraud allegations. Of course, it is now changed to section 74A from the financial year 24-25. But for the previous financial year, there was section 73 and 74 in place. So, the Allahabad High Court concluded saying that we cannot say that there is an intent to evade tax, as the customer has proved that he has received the goods and sent the matter to the lower jurisdictional office for re-adjudication. So, the main circular they have referred with respect to the case law was circular dated 13/12/2023. It had nothing to do with cancelled dealers, but what it said with respect to section 74 became very important part with respect to this case law, because the mentioned circular said that without valid evidence, you cannot stamp a section 74 order upon a assessee. That is what mere non-payment of tax to the government will not make the customer ineligible for that ITC. For that, you cannot go on with section 74. So, with respect to this, the Allahabad High Court redirected the adjudication to the lower jurisdictional office, saying that they should again scrutiny the matter to verify the ITC, to check other records, to check the bank records and verify the ITC. The Allahabad High Court was taking a favorable position with respect to the taxpayer, because as there was no clear allegation to say that the taxpayer has not received the goods, or the taxpayer has only availed fake ITC or not satisfied the conditions of section 16 of the GST Act for that matter. So, they have objected section 74 and asked to re-adjudicate this. This section can very well be quoted in our reply to say that, because in many cases we see that if the ITC is on cancelled dealers, there is a definite allegement to say that section 74 will be taken by the department. If in many cases section 74 is taken by the department, but invoking section 74 is not valid. Section 73 can only be invoked. That too, when a customer can prove his genuinity, then there is no case of argument
from the point of view of the department.
So the next most important case law is with respect to the same Allahabad High Court, where with Solvi Enterprises versus Additional Commissioner Grade 2 and others. Here also the same dispute. The supplier was found non-existent and the registration was cancelled. The department claimed the buyer because the physical movement, they cannot prove the physical movement, they cannot see the trail of the physical movement. So the department asked the supplier, asked the customer to check to prove that there is actually physical movement of goods. The same thing was submitted by the assessee, saying that as on date of transaction, we have fully complied with all the conditions envisaged in section 16 of the GST Act. We have also duly received the goods. The supplier has supplied the goods to us, and the supplier has valid place of business as on the date of supply. So we are eligible for ITC. The same point of view favorable to the assessee was taken by the Allahabad High Court, saying that the burden of proof is only with respect to the department. The burden of proof is only with respect to the department to say that there is no physical movement of goods, and the department cannot simply allow us to say that once the supplier registration is cancelled, they cannot issue notices to all the customers to say that their ITC is invalid. So another case law that we would like to discuss is the Honorable Supreme Court case law with respect to ITC on cancelled dealers in GST. There is no case law that went far up to the Supreme Court as of now. But with respect to Delhi VAT, which is the exact replica of GST before the inception of GST, before 1/7/2017. For that case, a recent pronouncement is passed by the Honorable Supreme Court, where they said that mere non-payment of tax to the government, for mere non-payment of tax to the government, you should follow only the person responsible for paying such tax to the government. That is, in our case, if we pay to the supplier, it is the supplier's duty to pay the tax to the government. It is not the customer's duty to pay the tax to the government, because the customer's duty ends with paying the taxable value with tax to the supplier. It is the supplier's duty to file the GST or 3B return and pay the corresponding tax to the government. So in this regard, the Honorable Supreme Court took a view saying that you cannot go on after the customer before following up the supplier for the non-payment of tax, because the responsibility of payment of tax only with the supplier on the first hand. As Aravind sir said, the department, the government cannot be usually benefited, like getting the tax from the supplier and also asking the recipient to reverse the ITC. Both things they cannot do. The first thing that they should do is going against the supplier to say that you have not deposited the tax and you should deposit the tax, or else you should pay the penalty, or following up the department action against him first. Then only they can come to the recipient saying that your supplier has not paid tax, so you should reverse the ITC. So in this decision, the most important thing that was observed with respect to the Shanti Kiran India case law was that Honorable Supreme Court said that if the purchaser acted in good faith and purchased the goods satisfying all other conditions of they have mentioned only DVAT as it is the DVAT case law, but we can very well connect it with GST. It is only like old wine in the new bottle with respect to ITC, because the same conditions was prevalent in DVAT too. So when section 16 subsection 2 clause C is invoked, you can very well take God of this case law to say that whether they have followed up the supplier for the receipt of this particular tax amount, then only they can come against us. So what proactively the supplier, the recipient can do with respect to their ITCs, because we all know only with respect to 2021-22 ITC, now the notices are sent and now we are going back to the suppliers with whom we have dealt in 2021-22 to get a certificate or to get a valid response. What we can do now with respect to every ITC as a proactive measure, or what we do generally in Zentax Clinic when we advise our clients is, first take a GST for every ITC, or otherwise for every material ITC, for every big ITC that you take. You can take a GST portal screenshot, you can take a GST 2B 2A screenshot, filing status screenshot, where it will be evidenced that the supplier has really filed their GST 1 and GST 3B returns. You can always keep a track of physical movement of goods. One thing is through e-way bills. The other thing is through transporters documents like lorry receipts, consignment notes. The other thing is toll plaza records, FASTag data, because every time you go through a toll, FASTag is deducted. So that you can take evidence of. Then loading and unloading slips, GR and receipts. So that are all with respect to physical movement of goods. You can very well document it and keep it as a search, so that if there is any allegement in the future, because we will never know to which supplier the registration will be cancelled prospectively, because now we can tell that okay, in this date the supplier has an active registration, but we can never be sure if his registration will be active in the next year or after the next 2 years. And also we are not sure when the retrospective cancellation will come into effect, because in 2021 too, there are scenarios where the retrospective cancellation was applied from way back in 2018. So we can never be sure of any supplier for that matter. So it would be very prudent upon our part to have a valid defense with respect to physical movement of goods. Next is financial bona fides, bank statements. If the payment is made through banking channels, you can have a clear indication to say that we have definitely made payment. Ledger confirmation. In our accounting records, we can take a ledger confirmation. Next is evidence of business entity. It is always taken care of by the MNCs, at least for that matter, above the medium sector enterprises. They will go and visit the supplier once, and then only they will do a vendor registration in their accounting software with respect to that vendor. So wherever possible, we can do that too, because a mere place of business will not be enough for us to prove our genuinity. It would be better if we could go there. If it is big vendor, if we could go there and take a photo of his place of business as on date of transaction, or just before creating a vendor master, before getting introduced to a new vendor, it would be better on our part to physically visit the premises and take a photo of his business premises. Stock register entries. If we have a stock register entries, because every manufacturing sector will have a costing sheet, will have a clear input-output ratio to say that these are all the inputs we have received during the month, and these are all the production we did, and these are all the output supplies or sales that we have made during the month. So that stock register entries can be very well can be taken for this defense. Then consumption records. In many ERPs, cost of material consumed entries are reflected in the ERPs. Manufacturing sectors, I'm mainly talking with respect to the manufacturing sectors. So that can be taken out of. Then next is output tax payment. So when we can prove that, when they say that the supplier has not transferred the goods to you in the first place for you to manufacture it and sell it to your customer, then you can very well take a defense saying that I have sold this much goods to my customer without receiving the goods from my supplier. It is impossible for me to selling the goods subsequently to my customer. So that chain also you can prove at least for a month. If you could demonstrate that chain, it would be better for the notice to understand whether we have genuinely purchased that goods or not. So this is with respect to ITC on cancelled dealers. So when an ITC on cancelled dealer notices come, it is very important to address that notice first. Addressing the notice is the first part, because we cannot without addressing the notice, we cannot keep on saying that we are eligible for that ITC. Address that notice, give valid facts, give valid documents that are available with us to demonstrate our eligibility of ITC. Of course, as Aravind sir already told, there is no clear rule or law mentioned in the notice as such to say that this ITC is ineligible, but it is always prudent for us to reply to such notice as efficiently as possible from our part to prove our eligibility of ITC. So this is with respect to ITC on cancelled dealers. I will take the Q&A. If you have any question and answer, please put up in the chat box. I will take the Q&A and I will close the session. Meanwhile, I once again invite you all for the upcoming special events that we have planned for you exclusively. So we also have a WhatsApp channel. Every attendees following us regularly, every professional following us regularly are very well aware of this WhatsApp channel. If you are not sure, please scan the QR code and follow the WhatsApp channel. We are about the webinars and many case laws. Every day we are posting updates regarding the case laws. So you can very well follow the WhatsApp channel to get hold of it. Yeah. Yes, sir. Sure, sir. We will organize a specialist seminar to you on it, definitely. So thank you, Ramarao. Thank you, sir. Thank you very much. Thank you. Supplier has, Raman Kumar, sir. Supplier has uploaded his GSTR1 after cancellation of registration. This pertains to input service. Sir, if we have, after cancellation of registration, if he has uploaded his GSTR1, that should not be an issue, sir. But after cancellation of registration, if he has supplied goods to you, then it is little problematic, sir. Because he is not eligible to collect GST itself in the first place if his registration is cancelled. So that will be very difficult to on our part to prove that we have genuinely transacted with him, because once we cannot generate e-way bill. You also said that it is with respect to input service. Every time we can check with the vendor master to say that whether he has a valid GST registration in place as on the date of supply. Ashok sir, yes sir, we have recording of this program in our YouTube channel Zentax, which will be uploaded very shortly. We also have our previous recordings in the in our YouTube channel. You please look into that also. Yeah, I think that's all with the questions. So if there are any other questions too, you can very well reach out to us in the given WhatsApp or call number. So thank you everyone for the warm reception that we had with the webinar. Last 3 weeks we couldn't have the webinar because there were continuous sleeps. We had many inquiries to ask that what is the webinar topic this week from the regular attendees. We are very grateful to you for continuously following up. So we also request your support for our new avenue that we go into AI tool, with respect to the AI tool that we have personally developed. See you at the OFA event next week. Thank you. Thank you very much.
Thank you, Surya. Thank you.